Good morning, traders. Thanks for joining. It is Thursday, June 26, 2014, 8:02 a.m. Chicago time. Trading futures options on futures and foreign currency involves substantial risk of loss. It is not suitable for all investors. My personal opinions, market data, and recommendations subject to change. Past performance is not indicative of future results. So, quick run of the overnight news. French June consumer confidence came in slightly better, 86 versus 85. German IFO raises GDP forecast 2% from 1.9 this year, next year 2.2%. Standard Chartered, which is on the FTSE for those who trade the FTSE, disappointed H1 due to difficult trading conditions. Sees H1 or first half operating profit at negative 20% year on year. It's a pretty big hit for a bank. The Bank of England voted to cap the bulk of high loan to income mortgages. It's basically taking steps to cool off the mortgage market in the UK. Very heated market. Iraqi forces are making strides in pushing back ISIS from various energy installations. They seem better organized. And then just now, about a half hour ago, U.S. initial jobless claims came in at 312 versus 310,000, slightly worse. Continuing claims came in at 2.571 million versus 2.565 million. Continuing claims also slightly worse. U.S. income came in at 0.4% in line, and then Fed's lacquer just now has said that some indicators suggest that the U.S. labor market has recovered than the unemployment rate indicates. So looking ahead, and none of this really got a reaction, including the initial claims in the overnight session, according to my charts. Looking ahead today, 9:30 Central, we have Netty Gas expecting 105 billion for those who trade that, and then 10 a.m. we have Kansas City Fed expecting 10. This is a low importance number. But then at 12:05 Central, about 1:05 Eastern, Fed's Bullard speaks on monetary policy. You'll want to pay attention to that. Let's take a run through of yesterday's action. For those of you who are here or who have gone to YouTube to watch the recording afterwards, the expectation, the primary hypothesis for yesterday was for a test back into the prior day's range. I had outlined 37 and a quarter as the bottom. As you can see here, this has been here since Fed Day. It's the bottom of the Fed Day run. Here's your Fed Day. This is the bottom of the Fed Day run right here. We had an initial balance there that morning of 37 even, and we traded inside of that pretty much below that pretty much the whole day until the Fed came in and broke out. We have what I called yesterday a weak auction or an incomplete auction down to 37, and we opened yesterday at 37, 38, 37.75, and basically had a responsive buyer back into the 50. The target I had set yesterday was the 50 level. That's a new key area that's come into play. I got to 49 early, pulled back into the IB, chopped around, and then started to walk through it to 51, so through it by 4 ticks, and then later on it pushed back into the point of control. It took out the point of control by 5 ticks as well. If you recall, I had said that yesterday had no value because the market had a trend up and then a trend down, so there was no value. The market was seeking value. That's the job of a trend day. It's seeking value. However, I noted I wanted to bring your attention to the fact that the market did not trade away from the prior point of control, which is a 2-day balance period, did not trade away enough to move the point of control down or up, which essentially, and then I commented that this is likely to bring us back into balance. You see, this point of control is in line with these last 2 days of balance, Monday and Friday, and we're back into this mess here that we've put in. If I extend this profile to include yesterday's range, you'll see that the point of control, the MC point of control, the microcomposite point of control is 53. 53, that's the combination of these 3 days here. There's nothing from this day that influences this point of control. The combination of the 3 days gives us 53. The market went to 53 and a quarter. Market is again in balance. Okay, as we include yesterday's action, the 53 stays intact, and then the profile starts to take a little bit better shape, showing the profiles revealing that we have a pretty big ledge here still at the 55.50, 56 level that we talked about on Tuesday's Trader Bite, not yesterday's, but Tuesday's. So you can see what the market action here is, and this answers a very crucial question for us. What have we done? This is the whole point of this. Going through the past is what have we done? We want to know what we've done. We want to know what we're trying to do. What are we trying to do? We are trying to, we've successfully moved back into balance here in the ES. They've done a very good job of doing so. The market opens in a drive-like fashion and basically does not fall below the mid the whole session, does not retest the opening swing, nothing. It did a very, very good job of falling back into balance. So the next question becomes, so what have we done? What are we trying to do? How good of a job? So we've just answered that. And what is likely to happen from here? So let's look at the big picture a little bit. Where's my pause chart? So let's look at the big picture in a little bit here. For a little bit here, you can see from this low at the 1750 low that we put in on the 12th. You can see that the point of control goes from there to 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 there, starting to balance. Right. This is the point of control where I said it's stuck up here, even though the market moved down here and closed down near lows, closed at 43.25. Point of control at 52, and still our point of control is lower. Still we have a lower high, lower low, lower value, lower point of control, and so in all essence, the market is trying to reverse lower, but it pushed all the way back up to 53 before it pulled back yesterday to close at 49 and a quarter. So we are in this fat area of the composite. We are in the balance area. We're fighting the Fed day high, the Fed day point of control, the upper distribution, and the following day, the Thursday. We're battling in that area. We still have a very poor, an interim, pretty poor high here at 55.50. We still have this ledge with very low volume up here. An unnatural occurrence, and I think we're likely to go up and auction that properly. We have auctioned through the Fed's thin zone all the way through. Just we're short by maybe a couple ticks. We've re-auctioned this and we found our buyer. So the job was done by yesterday's market in that, or the last 2 days, in that it has pushed through the Fed day spurt and has found buyers in the 37, 37.75. Yeah, so that's an important area to still note. I still haven't noted in my chart what the shaded block, like you saw here, this shaded block is going to remain in place. So we have found buyers. This is the auction's job, is to auction lower, advertise prices lower, find buyers. It found buyers in the LVN zone and has pushed the market back up. So if we have found buyers, if we are moving the point of control down and we're moving value down and we found buyers, what is likely to happen next? What is the logical answer here? We're trading at yesterday's close. The point of control is beneath us. So the expectation today is that we would open today in value. It's likely to look for early responsive sellers into this kind of bulky, boxy value area, but still a very valid value area. It would likely to try to push lower, but the expectation is for it to find buyers and to turn and then continue up and retest this 55.50. That is my primary hypothesis. As always, the hypothesis is simply a plan or an expectation. By having an expectation, I've created an anchor on how I'm viewing the market. Not an anchor on the market, but how I'm viewing the market. If I have an anchor on how I view the market, at least now when we move away from that anchor, I have something to measure by and understand this idea is not taking place, so look for the opposite. So no matter what, no matter how we open, no matter what we do, the goal is to always have some sort of expectation, some plan for the market's behavior. And then that way, all I have to do when the market's trading, which is the point at which most traders' judgment is clouded by a lot of input and a lot of emotions and so forth, I don't have to deal with any of that. All I have to do is wait for the market to tell me which plan it selects, and then I know what areas I'm going to act, where I'm going to act, and what I'll do, and then I just have to do it. Okay, it simplifies things. This is how, in my opinion, this is the most professional way to trade. It is to come in with a plan and then look for the market to confirm, or not confirm, but to show you which plan is failing, which plan it might go to next, and then you take a probabilistic position in the direction of that plan. I hope that's clear. So that's the point of coming up with these hypotheses. Primary hypothesis is a responsive selling into value, into that Fed zone again, to find buyers, looking for 55.50 as the key target. 55.50 from here is only 6 points. Looking for the market to push into the 55.50, probably fail back to 53, the MC point of control, and then chop around and then to find its skew higher in line with the intermediate and long-term trend. The short-term trend of value is lower, actually. So we'll see if that gets reversed today. It's important today to see where this point of control ends up. The expectation is the point of control will likely end up in the 53 zone. So 54, 52, we expect the point of control to end up here today. If it doesn't, that'll give us something interesting for tomorrow to look forward to. Anyway, so that's 15 minutes. In addressing the question of any potential additional risk, there is additional risk here with Iraq, with the prices of crude oil and gold all over the place. You need to pay attention to what is happening there, because it does have this this mess in Iraq, drawing in Syria, potentially Jordan, does have the potential to change future pricing on energy and force the involvement of various countries, coalitions, and so forth to dismantle this issue. Very, very expensive war there. But so the headline risk, and then as always, this is summer trading. It is the end of June, and it is paramount that you just relax. This is a good time to kind of work on studying, research during the lunchtime doldrums. Just relax. Let the market come to you. Don't go around chasing the market, because it's not truly, even though we've had 2 days of decent range, right? These 2 days here, we've had okay range. In the past, we have not, and generally you'll expect this range to drop drastically. If my primary hypothesis plays out, we expect today's range to compress drastically as we turn into an uptrending market, so volume expected to go down, and so is the range. So calm down. It's in my opinion, it's not a breakout market. Just take your time, wait for the market to come to you, and trade before you put it on. Good luck with that, and we'll talk soon. Take care.